Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. We have a very fun one for you today. It is the new strategy thesis. Fun fact, the first video ever on this channel is the strategy thesis, but because strategy is going through a fundamental metamorphosis, it is time to update the thesis. The fundamental truth is that strategy is the most exciting trade in the world because they are on the precipice, on the forefront of changing capital markets. There's been so much dialogue surrounding this trade. I really want to get into all of it. So this is my agenda. Gonna start with some first principles. Number one, we're going to talk about BTC yield and Bitcoin per share because a lot of the dialogue has been frustrating to me. So we're going to revisit those. Then we're going to go into outperforming Bitcoin and leverage, the original thesis behind why you would buy MSTR. I'm going to be explaining the November 2024 all-time high, the factors that led to that all-time high, and kind of talk about why the stock price today, in my opinion, makes a lot of sense. We're going to be talking about MNAV and the relationship of MNAV to leverage, as well as the fact that this is a long-term, very structural trade because of the ability to tap the credit markets. And then we're going to end talking about BTC amplification and BTC factor for some ultimate bull fuel. And then we're going to talk about STRF and MSTR and the debate going on about the claim on the Bitcoin in the event of a liquidation scenario. I'm giga bullish on strategy for the reasons that I will be getting into, but remember, this is not financial advice. This is financial entertainment. And by the way, this is an orange presentation today, so I'm very sorry for the orange glow on my face. Hopefully it looks okay. Before we get started, a very special thank you to Horizon for sponsoring this video. If you guys didn't know, Horizon helps you buy Bitcoin using your own home equity without debt, monthly payments, or term limits. The Bitcoin is fully yours to hold however you want to with no risk of forced liquidation. They are linked down in the video description, and I will talk more about them at the end of the video. So I got into some fight with some kids on X the other day just talking about Bitcoin per share because I continue to see this sentence that Bitcoin per share doesn't matter. So I just pulled up the X post. I'm going to read it because it summarizes my viewpoint. This is the fundamental crux of the entire thesis. It is Bitcoin exposure. So I wanted to clear that up a little bit. Unbelievably, I continue to see this incredibly idiotic argument on here that Bitcoin per share doesn't matter. I can't believe I have to make a one-stop shop to actually debunk this statement, but I think enough brains are totally broken on here that it is necessary. So here we go. Guys, think if Company A has 1 share and owns 10 Bitcoin. Company B has 10 shares and owns 1 Bitcoin. So now we can look at the Bitcoin per share. Company A has 10 BTC divided by 1 share, and they have 10 BTC per share. Amazing how math works. And then Company B has 1 Bitcoin divided amongst 10 shares, so they have 0.1 BTC exposure per share. Now, for simplicity's sake, if Bitcoin is worth $100,000, then Company A's intrinsic value per share is $1 million per share. Company B would be $10,000 per share of intrinsic value. So if a Bitcoin treasury company issues shares but uses the proceeds to buy more Bitcoin, there is simply one key question. Does the Bitcoin per share go up or down after the transaction? If the Bitcoin per share increases, the shareholders are not diluted. They're actually getting more levered to Bitcoin's upside because their exposure to Bitcoin grows. It goes up. The company is effectively, for you as a shareholder, increasing your claim on Bitcoin per share that you own, even if the total amount of shares rise. This is why MSTR or Metaplanet's issuance is not like just fiat dilution. When I see the word dilution, I really hope that people understand that it is accretive in Bitcoin terms. And the statement I ended on was, do you think MSTR became the best performing equity over the past 5 years by being an accident or by some other mechanism? Another sentence I cannot stand is Bitcoin per share doesn't matter when the stock price goes down. This frustrates me because apparently then nothing will matter if the stock price goes down. It's like saying the market is now valuing the equity less today, therefore the claim on the BTC is totally irrelevant. Makes no sense at all in the slightest, yet I see it all the time. And then after I make that point, I see this, but Adam, you can't redeem your shares for Bitcoin. And to that I say, yes, that is true, but it is literally financially irrelevant. No shareholder has a direct claim on any specific asset, whether that is Bitcoin Bitcoin, whether it's cash, it's factories, or real estate. You don't have a claim on Apple's iPhones or Tesla's gigafactories. You own a pro rata claim on the company's balance sheet and its future earnings, which means that your equity stake, the equity you owning shares, that represents a fractional ownership of all assets minus liabilities, which explicitly includes Bitcoin on the balance sheet. So yes, you cannot redeem your shares for Bitcoin, just like you can't walk into Berkshire Hathaway's office and redeem your stock for a slice of BNSF Railroad. But your shares value is derived from the assets that you're claiming indirect ownership of. This is like this with any company in the world. You don't have a claim on Tesla's factories. And this is why Bitcoin per share matters, because that is what your equity literally represents. We know it matters because I can compare companies increasing their Bitcoin per share versus not increasing their Bitcoin per share. And look here, the Bitcoin era standard right here. As you can see, MSTR totally obliterating every other company that's not stacking Bitcoin. They increased Bitcoin exposure over the course of 5 years and added intelligent leverage, and look what happened. Crazy, I know, but yeah, totally doesn't matter. I'm sorry I'm getting worked up, guys. I had to get that out of the way. Now, the entire thesis behind MSTR is that you want to outperform Bitcoin. Now, in order to outperform Bitcoin, the hurdle rate of Bitcoin as an investment, you need something called leverage. Now, traditionally, strategy has used convertible debt as their form of leverage, and here you go. This is all of them listed, all of the converts that are currently outstanding. There are 6 converts right here for a total outstanding of $8.2 billion. But the age of the convertible bonds are ending. They're not going to be doing any more of these. The company has explicitly stated that they are going to let these equitize and turn into shares. Now I want to talk a little bit about why this age of the convertible is ending. Hedge funds that buy MSTR's convertible notes often short the common stock to create a delta neutral position. They do this because the convertible bond's embedded call option gives them upside if the stock rallies, while the short position then hedges their downside if the stock falls. Now, this is called something called convertible arbitrage. It's not a bearish bet on the company's fundamentals per se, but it does add short interest mechanically. Now, that can have an impact on the share price because when these hedge funds short large volumes of MSTR stock, it can temporarily suppress the price momentum or amplify downside volatility. The more attractive the terms of the convertible note, the more shorting pressure appears. For example, during the periods when Bitcoin's price momentum stalls, these funds may increase their hedging, leading to sharp downward moves in MSTR stock. The fact of the matter is that the convertible bonds invite short sellers. So there is a bit of a strategic trade-off. The upside is that convertible debt has allowed strategy to raise billions of dollars, sometimes under 1%, and then they go buy Bitcoin without immediate dilution. And then the downside is what we kind of just talked about. The structure of the convertible note does invite that short-term arbitrage pressure, and it complicates price discovery in the equity layer. Now, as a possibility over time, as the stock rises far above that conversion price that's listed right here, the bonds then just convert into common equity shares, which eliminates the debt, and then it unwinds the shorts, which could cause very powerful short squeezes. Now that we have covered how strategy got leveraged in the first place, now it's time to talk about what happened in November 2024. For those of you who weren't around, this was MSTR's all-time high right here, November 21st. The stock reached a price of $543, which is pretty wild, craziness. Looking right here, it looks like that in September, the stock was trading around 125, and then it almost 4x'd since then. So when the stock 4x's and 5x's in 2 months, that's pretty crazy price action. So now we need to explain why the stock reached that all-time high, because back then, strategy was a fundamentally different company. And we're going to get into the details why here. The Bitcoin held on the balance sheet on November 1st, 2024 was 252,220. The spot Bitcoin price on the close on November 1st, 2024 was just under 70K per BTC, 69,482. The convertible debt that was outstanding was $4.27 billion. And then looking back at Convert 2029, it looks like that they issued one on the day of the all-time high, which is the most valuable one at almost $2.7 billion. So point being, they had $4.27 billion of leverage, but they had over $6 billion very shortly in just a matter of a few weeks. Now we're going to talk about the leverage because remember, the whole point of owning MSTR is the fact that it is leveraged Bitcoin, at least it was back in November 2024. So the fair value of that Bitcoin that they held was about $17.5 billion when you take their amount of Bitcoin that they had on the balance sheet times the closing price on November 1st. $17.5 billion, remember that. So with a simple division problem, we see that they were 24% leveraged. The debt of $4.27 billion divided by the $17.5 billion fair value of the Bitcoin ends up at a 24%, which means that the coverage ratio, the Bitcoin value divided by the debt, was 4.1x. So for each dollar of debt MSTR held, $4.10 of Bitcoin. And debt per Bitcoin is an interesting way to look at it too. They carried $16,950 of debt secured by each of their Bitcoin. Shout out to SaylorTracker.com for providing this graph, but something interesting happened in November after all of that leverage. We saw an incredible amount of Bitcoin buys. Look at the orange dots. This is from the start of the Bitcoin treasury strategy. And then we saw what happened in November 2024. We saw Michael Saylor take advantage of the premium and buy Bitcoin like absolute crazy, which is a great thing. Obviously, we're buying it for the Bitcoin exposure, but as a leveraged Bitcoin play, when you add this much Bitcoin, it has a deleveraging effect. Now, the Bitcoin pile and the price boom of Bitcoin itself in November, it drove the Bitcoin collateral up over 4x, while the debt not quite doubled. So the result is that the core leverage fell from 24% to 11%, giving nearly 9x collateral coverage. And this is really interesting, even layering on $6.6 billion of the outstanding credit instruments right now, Strike, Strife, Stride, and Stretch. The total credit LTV is about the same as the pure debt LTV of a year earlier. From today, back a year ago. Yes, are you following? Which is just reflecting how much the balance sheet has deleveraged relative to its Bitcoin trove. This is absolutely crazy. Look what they have done in under a year. 252,000 Bitcoin to 640,000. That is a lot more than a doubling of the Bitcoin. That is up 154%. The spot Bitcoin price is up 65%, so the fair value of all the Bitcoin is up 321%. Now you need a lot more debt to be leveraged. We had 2 new convertible notes, so now they have $8.2 billion of convertible debt outstanding. So this is what's happening right now, is that we want to have this a leverage vehicle. Michael Saylor is trying to get it leveraged by coming up with these incredible new ideas, but you need so much to absolutely drive that big Bitcoin stack. And that's more so just reflected in this number right here, from 4.1x collateral coverage to 8.9, which is over a 2x increase of their collateral cushion. I like that debt per Bitcoin number. Remember, a year ago it was $16,930. Now it's $12,870. So this is the point I'm trying to make. Right now, strategy versus a year ago is a fundamentally different trade because there is a fundamentally different balance sheet, therefore making it a fundamentally different company. Remember, the plan is to not issue any more convertible debt. We've been deleveraged, and now the plan to get capital to access more Bitcoin is wildly different. I continue to see a lot of people having the MSTR and IBIT chart up there asking, why would I buy MSTR if IBIT is outperforming MSTR? Which is a valid question. Absolutely. I think that if you want a leveraged Bitcoin play, and that is your thesis on a short time horizon, there are probably better options out there, which is why you see some people going toward making their own IBIT calls. So in my opinion, the current logical thesis right now is not being able to outperform Bitcoin on every time horizon. The balance sheet has just been massively deleveraged as a result of the Bitcoin NAV exploding with the price of the Bitcoin and the size of the stack itself. We're going to head on over to TradingView right now to illustrate this point. I have MSTR versus IBIT pulled up right now. This right here is the strategy high at that $543 on the 21st. And this is where strategy is at today. So that is our blue trend line right there. And then if we're looking at IBIT on that exact same day, the 24th, we're going to go ahead and draw a line just to show you the trend of good old IBIT, spot Bitcoin versus MSTR. And you see a clear divergence there. IBIT has been outperforming MSTR since that point. It's interesting looking back at July through October, you see that it was pretty neck and neck right here. It was a very close race. And then this divergence happened crazily. What do I attribute this to? Well, a once-in-a-generation scenario. That's what I attribute it to. In November, we were anticipating an election where a president promised a strategic Bitcoin reserve. Then we saw the all-time high of Bitcoin on election day, and for the next 2 weeks, we saw a bit of Bitcoin mania. That was a massive hype cycle that obviously happens only once in a blue moon, where the demand for the leveraged Bitcoin in that time frame went parabolic. Everybody was aping into MSTR to get their leveraged Bitcoin on top of that amazing news for Bitcoin. Saylor then, in my humble opinion, made an incredible decision to take what the market gives you and buy Bitcoin in that historic buying spree that will go down in history. He accumulated that much Bitcoin in the year since then, and that will appreciate at a huge CAGR in perpetuity. And that is now allowing him to gear up for the next leg of what strategy will become. So when people say, Adam, why would I buy MSTR if Bitcoin outperforms it? Well, that's a very short time horizon. MSTR has outperformed Bitcoin greatly ever since they started the strategy 5 years ago. If you want to have a shorter time horizon where you want to try to outperform MSTR, there are absolutely reasons and ways to do so. But that is fundamentally divorced from what Saylor is trying to do with the new strategy. Now, before I get into the new thesis of why I still love MSTR over the long term and why strategy is absolutely incredible, it'll be the most valuable company in the world, etc., I want to talk about MNAV. I want to talk about MNAV because a lot of people think MNAV is some lever that Saylor has in his house, and he just pulls it up and down whenever he wants to. But MNAV is literally just sentiment. And this is why I'm going to put my Austrian economics hat on to explain it to you. Valuations arise from individual value judgments. When individuals trade, they are just revealing their preference in that moment. Each exchange happens because both sides of the trade value what they receive more than they give up. Yes, this is very vital high school economics stuff for you. So the market's price of an MSTR share, for example, that emerges from these interactions as a historical fact, reflecting the intersection of subjective valuation in any given time and place. There is no central planner setting prices because it's everybody valuing different things at different times. So price is therefore a spontaneous result of countless decentralized decisions. Market cap is determined by the price times the amount of outstanding shares. Therefore, market cap is literally determined by countless decentralized decisions among the marketplace about what each share price is worth. And the market cap is the numerator in the MNAV equation, or the enterprise value if you want. So therefore, MNAV is literally sentiment. You are just denominating the current market sentiments by the value of their net assets, and that's what gets you that snapshot number. There are an infinite amount of variables that drive valuation and price in markets, and therefore MNAV. Now, I think mispricings are all over the Bitcoin treasury space. That's why I talk about it so passionately. But I do think that the amount of times that the treasury covers its outstanding debt does have a big impact on the MNAV. Using Metaplanet as an example, the value of their Bitcoin right now covers their debt almost 120 times. And the market is not rewarding that with a high multiple, likely because there really isn't a lot of leverage. So quick takeaways, MNAV is not a lever that Saylor has in his house. It's not a dial either. It's definitely not a dial. And I think the market values the leverage. They value the debt a lot, as evidenced by this MNAV on Metaplanet and strategy right now, as well as the divergence in the value of the net assets versus what the multiple the market was willing to pay for those assets back in November 2024. There was a difference in sentiment, therefore a difference in MNAV, yada, 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 you get it. This is the strategy versus Metaplanet 1-year MNAV. As you can see, it oscillates, it varies due to many different circumstances. As we all know, we are living in a time of very poor sentiment, and oh my God, look, would you see the MNAV is totally collapsed. But it's very clear that there is a bit of cyclicality to this whole phenomenon. It does appear to be a bit of a cycle. You can see it ebbing and flowing. And when we look at the 5-year strategy MNAV, it does the exact same thing. As you can see, it starts up high, goes lower, goes up high, goes low, goes high, yada, yada, yada. And then when Saylor saw the MNAV at this level with that much Bitcoin, they needed to attack and accumulate as much as possible. That was an amazing buying spree. A lot of people are mad that he bought that much Bitcoin in that shorter period of time Maybe those investors had a shorter time horizon. They were mad that he deleveraged the balance sheet that quickly, which I kind of understand, but then again, I'm a 30-year-old guy. I'm still young. I want him to get as much Bitcoin as possible because he can grow the Bitcoin exposure over the next 40 years of my investing life. In 40 years, a lot of these people complaining about the deleveraging will, no offense, but they will be dead, likely due to old age, unless AI saves them. So the balance sheet is deleveraged. So what is the new thesis where you don't want to keep issuing converts to invite the short seller attacks? Well, Bitcoin-backed credit is the new thesis. We all know that because strategies issued Strike, Stride, Stripe, and Stretch $6.589 billion, 9% of their Bitcoin net asset value. And the opportunity before us is a lot more powerful than wanting to outperform Bitcoin over a short time horizon due to leverage gained from convertible debt. Strategy is now a long-term structural trade based on the transformation of capital markets. The world is going to be capitalized on Bitcoin, and that is the entire point. So if for a short time it didn't outperform Bitcoin for you, guess what? I don't care. I'm still bullish because of this opportunity. We can look at the universe of comparable assets of all these preferreds versus what they're competing with and see a stark difference in the quality of the products that are offered when Bitcoin is on your balance sheet. This is from their Q2 earnings report, so this is on July 29th, but there was 1.1 billion outstanding of STRF. For those of you who don't know, STRF is competing with investment-grade bonds out there, and there are $5 trillion worth of outstanding investment-grade bonds out there. What do those bonds yield? Well, they yield about 5%, which does not outrun shadow inflation of the monetary debasement from the M2 money supply expansion, with STRF paying an 8.7% versus that 5% from the investment-grade bond equivalent. You are outrunning inflation. Traditionally, the collateral behind those investment-grade bonds is 2.1x. With STRF, it's 8x, and with about 4 times as much liquidity. So if you want to get out of your position, you totally can. So it's a fixed income product that is yielding what, 3.5% more? 8.7 versus 3.7% more, 4 times as collateralized. And then if you look at this, it's given you a 30% return since March 21st. As a fixed income product that is more collateralized, paying you that much of a higher yield, that is a safer investment, and it's giving you a 30% price appreciation. There are oceans and oceans, trillions of dollars of capital just waiting to be tapped by these superior instruments. This is the opportunity. The global fixed income markets now carry roughly $145 trillion in outstanding debt securities, sovereign, corporate, municipal, mortgage, and asset-backed paper alike, according to SIFMA's 2025 Capital Markets Factbook. That entire ocean, trillions of dollars of capital, is hungry for duration and nominal safety, yet it is increasingly trapped in instruments that deliver negative real yields versus inflation. And it has way more counterparty risk. See my couple videos on risk to understand this. Strategy's growing suite of Bitcoin-backed credit instruments positions the company as the liquidity valve between hundreds of trillions of dollars of capital and the 21 million coin cap of Bitcoin. This opportunity is massive, and yes, I don't care if you are a trader wanting a short return. I do not care what your opinion is on IBIT versus MSTR over the last year. This is so much more interesting on a multi-decade time horizon. Honestly, I don't even check the share price anymore because I don't even care. I don't even care because I know Bitcoin is inevitable as the next global monetary base, and I can wait for the world to understand that. Even if they tap 0.25% of that 145 trillion, and actually the addressable market is higher, which I will get into, about $360 billion would seek the ultimate form of collateral via MSTR that can appreciate rather than debase. It would represent buying power of 3 million plus Bitcoin at today's prices, which is more than 15% of the supply. They are building out the yield curve for BTC credit. If you look at this, there is a variety of durations that they can issue products for. They're admitting there's a future opportunity, $30 trillion in the medium duration corporate credit. If you look at the y-axis, the yields that these things are paying out, they are destroying everything that they are competing against. Leverage loans, junk bonds, preferred stocks, the US Treasury bonds. It's not even close. The market for what they are doing is so much bigger than what they were doing before. This is the ultimate ambitious project of strategy. The preferred equities offer far superior yield as well as liquidity. Remember, how are you going to get out of owning a long duration forward or target bond? You're not. You see the next COVID coming. You can't get out of that position, but you could get out with one of these. The liquidity is there, especially in the stretch. Look at that trading volume. Wild. The collateral is better. The yield is better. So there is an obvious market need for instruments that are backed by Bitcoin. And right here, they comment on what I mentioned earlier. Their plan is to reduce the overall senior convertible debt outstanding. So they're going to equitize all of those bonds, and then it's going to simplify the structure, and then that's just going to elevate the BTC rating of all their preferreds, which means that they are going to be perceived as even safer. They are going to be more collateralized. And this is the ultimate point. If you want $1 million Bitcoin, which Michael Saylor definitely wants $1 million Bitcoin, we all do, you need to go where the money is. 97% of all institutional capital is mandated. Mandated meaning that they are required to buy, mandated to equity and credit. Look at Bitcoin as an asset. It is this small right here. There's 30 times more institutional capital available for Bitcoin equity and Bitcoin credit compared to Bitcoin in commodity form. You need to build the infrastructure so the money can flow to Bitcoin. This is the grand master plan. You have to access the trapped capital in the world to get it to flow to Bitcoin. And you can't do that by waiting. You can do that by being revolutionary, by creating the products that is going to have incredible market need so the markets can't ignore them. Shout out to Jesse Myers doing Bitcoin strategy at the Smarter Web Company. What a great guy, a total genius. He has created this nice little infographic of the global wealth across assets to demonstrate what I'm talking about. Bitcoin, $2 trillion asset. Look how small it is right here. Yet you have $300 trillion that are trapped in bonds, and you have $120 trillion trapped in what is called money. How do you get all this trapped capital to flow to Bitcoin to make it more expensive? You need to build the pipes. You gotta build the pipes, and that's what strategy is doing. And the fact of the matter is that this is just gonna take time, okay? Shout out to Jackson Fairbanks from Strive. He is literally posting these charts, the trading volume of those preferreds, and Bitcoin-backed credit is coming fast because it's too good. The market can't ignore it for a long period of time. Look at this, September 15th to the 19th, all of them combined a little over 3.5 million of PPE weekly volume versus the 5.5 million that we're at now. Now, strategy trades at a premium to their Bitcoin because of their credit amplification, the amplification of intelligent leverage. Now, time to go into this, as well as these other things, the options market that strategy has, the passive flows, soon to be the S&P 500, hopefully, the institutional access to that capital. They can reach that capital. Bitcoin just can't. So intelligent leverage, Bitcoin factor is the ratio of your ending Bitcoin per share. Remember Bitcoin per share, your exposure to Bitcoin while holding the common equity. This is the ratio of your Bitcoin exposure after 10 years, assuming a 30% Bitcoin annualized rate of return. If strategy can leverage their balance sheet at a 30%, paying an 8% dividend rate, the ratio of your ending Bitcoin per share to the starting Bitcoin per share is a 2.8x. This is without the dilution that you're all scared of when Saylor hits the ATM. Now, who knows what the market discovery of these products will it be? Could they reach 50% leverage? Well, you're looking at a 9.1x increase in your Bitcoin exposure in the common equity. MSTR amplifies BTC through intelligent leverage. Say it with me. Remember, this is over 10 years. This is a long time horizon. This green bar is the leverage that is working for you over long time horizons. This is the increase in your Bitcoin exposure. So I do not care if IBIT has outperformed for just a little bit. MSTR is fundamentally a long Bitcoin, short fiat position. Use debt as a speculative attack and increase your Bitcoin per share. That is the new strategy thesis. There's also this debate going on about STRF and MSTR and who actually has the claim on the Bitcoin as it relates to a liquidation scenario. But I think that claim that the STRF holders actually have the claim on the Bitcoin per share, I think that misunderstands what the seniority actually means, because that is seniority in a liquidation event. In my opinion, the market shouldn't necessarily price that as a real claim on the Bitcoin per share if that liquidation event is near impossible. And the reason why is Bitcoin could fall like 85% from its current levels and Strategy would still have positive equity value. They would literally be fine. I'm viewing the liquidation preference of STRF on top of the capital stack as a structural kind of formality, not a functional claim on the Bitcoin treasury. People are treating it as if it dilutes MSTR's claim on the Bitcoin, but I think it misunderstands that Strategy is nowhere near liquidation and they probably never will be, assuming that you know Bitcoin is inevitable. So anyway, that is the thesis. These are the thoughts that have been rattling around in my head. Please, if anybody disagrees, leave a comment. Let's get into it. I enjoy the healthy debate. Like this video if you enjoyed the content, subscribe to the channel to support me spreading the orange gospel to the masses, and have a terrific day. Do not party too hard. Class dismissed. Once again, a special thanks to Horizon for sponsoring this video. Most people don't realize this, but on average, 60% of American homeowners' net worth is locked up in their primary residence. And with home prices more inflated than ever, Americans now sit on a combined $35 trillion in home equity. Now there's a way to unlock that trapped capital and put it to work in Bitcoin. Horizon helps homeowners unlock a portion of their home equity to buy Bitcoin. It is not a loan, so there are no new monthly payments. You keep living in your home as usual, kids. Later, when you sell, refinance, or choose to settle early, Horizon's provider takes an agreed share of your home's future value. That is the trade. Unlock cash now to stack Bitcoin by selling a slice of your home's future value while you continue living in it. What makes Horizon stand out is that there are no term limits and you keep 100% of the Bitcoin upside. The Bitcoin is fully yours to custody however you want, wherever you want, with no risk of forced liquidation. If you've been sitting on a pile of home equity and are eager to invest in Bitcoin, this may be the product for you. Visit joinhorizon.com to see if you qualify and get started. Their team of experts will work with you one-on-one from start to finish. Transform your dormant home equity into Bitcoin today with Horizon.